Well, it's time now for a look at the day's top business news, and we're starting with what's likely to be the world's largest ever public stock offering, whose subscription period opened this weekend in Saudi Arabia. Our business editor, Brian Quinn, is here to tell us more. Brian.
Well, Haxi, Saudi Aramco is the world's most profitable company. The state-owned oil giant published the latest version of its prospectus Sunday as initial subscriptions opened for investors in the kingdom. The initial share price values the company overall up to $1.7 trillion, well below the $2 trillion valuation initially targeted by Saudi Crown Prince Mohammed bin Salman. Erno Gunke reports.
It's likely to be a record-breaking initial public offering, but less so than Saudi officials had hoped. Saudi Arabian oil giant Aramco, the world's most profitable company, is set to sell a 1.5% stake, or around $3 billion of its $200 billion regular shares. The stock prices will range from $8 to $8.50 per share. Crown Prince Mohammed bin Salman had originally hoped to sell 5%, though lackluster demand from international investors forced the company to scale back. Instead, Aramco will rely largely on regional sovereign funds and domestic investors.
Aramco company is the crown jewel of the investment in Saudi Arabia and a safe company to invest in and the biggest company in the world.
The latest figures estimate Aramco's value at between $1.6 and $1.7 trillion, falling short of the $2 trillion initial target Crown Prince Mohammed bin Salman had originally hoped to reach. Still, the sale is expected to raise just over $25 billion, which could make Aramco's initial public offering the most valuable in history, surpassing the current record holder Alibaba. In 2014, the Chinese e-commerce company brought in $21.8 billion on its first day of trading. The kingdom's decision to sell a portion of Aramco is part of a wider economic strategy. Riyadh is looking to diversify its economy by developing industries outside the energy sector. This as the global movement against climate change seeks to reduce dependence on fossil fuels.
Next, the Middle East's top aviation conference opened Sunday. The biennial Dubai Airshow got off to a slow start with no major sales announced. Key global carrier Emirates Airlines holds the keys to around $30 billion in existing orders from both Boeing and Airbus. One of their orders for 150 Boeing 777s is now in question amid long production delays. Another order for 70 Airbus planes also up for revision following the European jet maker's decision to axe the A380 Super Jumbo program. Of course, once again, casting a long shadow on the event is the ongoing grounding of Boeing's 737 MAX model.
So what we have seen in the US in particular with the Boeing 737 MAX issues has been they need to go and recertify a lot of the systems and safety features and so forth. And this has brought in a lot of delays at the regulatory side, which then means that flows onto customers, and that can also flow onto customer order, customer confidence. However, that doesn't mean these orders won't happen. They could still happen. But now we're just seeing that delay in the manufacturing side and the delivery.
Checking in on the markets now, European indexes with a muted opening as investors watch for developments in the ongoing U.S.-China trade war. Top officials in Washington and Beijing reportedly spoke by phone Saturday about a potential phase one deal to end that conflict. London's FTSE 100 and the CAC 40 here in Paris opening just barely in negative territory. Frankfurt DAX up around 0.1%. Over in Asia, most indexes saw gains on Monday. The Nikkei in Tokyo ending the day up around 0.5%. Hong Kong's Hang Seng Index weathering the city's political crisis to finish the day up over 1.1%. Earlier, France 24 spoke with Stephen Innes, head market strategist for Asia Pacific at Axie Trader in Bangkok, on what effect the violence in Hong Kong is or isn't having on regional markets. Take a listen.
The negative Hong Kong sentiment has not led to any significant contagion in the region. And, after another weekend of chaos, the Hang Seng is trading higher, just suggesting that there's no fear here. The global trade talk beat goes on. And, there's some optimism something's going to break here, but every weekend we come out with the same narrative. Seems doom and gloom. And for me, I do believe the market is probably underpricing this likely contagion down the road if this continues to spiral out of control the way it appears. But as it stands right now, things are okay.
And finally, for business, the Ford Mustang is an icon of the internal combustion engine, known not only for its muscle car styling, but also the roar of a gas-powered V8. Well, those images apparently due for a revision. Ford has just unveiled its newest Mustang, an all-electric SUV. The Mustang Mach-E made its public debut in Los Angeles Sunday as the company bets big on electric in a bid to catch up with rivals like Tesla and Porsche. The new Mustang is part of Ford's plan to invest $11.5 billion by 2022 into electrifying its fleet, looking to go carbon neutral by 2030, I think they say, Haxi.
Brian Quinn with a look through the business news. Thank you very much indeed.